No, I don't. I do believe in clarity. By doing this and talking about this, it does, I believe, help some students get in the right frame of mind to learn. So it's okay. I can deal with it. Understanding the stock market basics, stock market crash, and just a few things about investing. Okay, that's our learning intentions today. Okay, you're not going to be taking a lot of notes today. Okay, we may have a few, but you won't be taking a lot. Okay, I take this class hour more as maybe helping you in the future. Okay, so one thing you got to understand about stock market and stocks in general, there are two types of businesses in this country. You have privately held companies. Okay, Zach. What I don't even know what part of the family. What kind of business does your family, your immediate family have? Okay, so it's privately held company. Okay, anybody else have family that own businesses? Okay, huh? Publicly traded business. Okay, what you got?
Lawn care.
Lawn care. Okay, so you got privately held, publicly held. So privately held, the largest privately held company, the second largest in the United States, is Koch Industries here in Wichita. Okay, that is owned by one person. His name is Charles Koch. Okay, his brothers have all passed on, and the one brother that's still alive, they bought out 25 years ago. Okay, so Charles is the last survivor. Okay, this is a huge company, and it makes billions of dollars. Okay, privately owned. So his one son, his only child, Chase Koch, may be in for quite the inheritance of this business. Okay, now some companies, when they get big like Koch, they go public. Take Mark Zuckerberg and Facebook, which is now Meta. Okay, he got big. And he said, okay, I'm going to go public with Facebook, which means that you and I, anybody on this planet, can buy shares of stock in that company. Most of these shares are found on different indexes like the New York Stock Exchange, the NASDAQ, the Standard & Poor's. And when you talk about certain mercantiles like cattle, hogs, crops, corn, wheat, those are traded on things like the Chicago Mercantile. Okay, so and you guys can buy heads of cattle, you can buy hogs, whatever. Okay, so when you invest in a public company, you could be one of millions of investors in that company. Does that make sense? Okay, do any of you currently, like grandma or somebody, bought you some stock when you were young? Okay, like, and what you got? You got some Disney stock. You know how many shares? Okay.
Disney and
okay.
Hold up your profile, sir. Let's see it.
Google is right now under investigation for antitrust laws. The Justice Department just opened an investigation into how they control advertising in this country, like a monopoly. Antitrust laws, okay? Stock's probably taking a hit. Google just announced the layoff of 12,000 employees, which may help their stock. Because what's expensive? People are expensive. So they're cutting their overhead. But now they're in investigation by the Justice Department. So I don't know what Google stock's been doing. Disney, okay, Disney went woke, started going broke. So they fired the CEO and brought back Jeff Iger, who is the former CEO of Disney. Okay, these are things you pay attention to as an investor, because you're investing in these companies for the long term, usually, hoping that they will produce more and more over time, and the value of their company will increase. Okay, let's take one company as example. Over the last 3 years, their value has increased just a little bit. A company called Pfizer. governments around this world bought billions of dollars of vaccines from, and then gave it out free to everybody that wanted it. Right? Moderna just said they're going to raise the price of their vaccines like a bunch. Which means if we keep giving it out free, the taxpayers will pick up the tab for that. Okay? Now, so how does a stock market crash? Okay, so I'm going to use a company you guys are probably familiar with. Okay, Boeing makes planes, yeah? Now, they used to be based somewhat here in Wichita. Their headquarters in Seattle, Washington, okay? But they used to have pretty big presence here. And so let's say Boeing stock is selling for $50 a share, okay? And you have $2,000 to invest, and you want to invest in Boeing, okay? At $50 a share, how many shares can I buy? $2,000. 40 shares, okay? So I own 40 shares. Now, Boeing receives word that China Airlines wants to buy 40 737s over the next 10 years. That's going to keep the employees at Boeing pretty busy. Yes? Is that good news for Boeing? So people hear this news. Now, where do you hear this news first? Who's the first to report on it? Usually the Wall Street Journal is a pretty good one, right? Do any of you guys subscribe to the Wall Street Journal and get notifications? If you are an investor, you might want to, okay? If you're a stockbroker, you certainly want to, okay? A broker buys and sells on behalf of other people, okay? So you want that information as soon as you can. So next thing you know, when this news breaks, Boeing stock is selling for $55 a share at the end of that day. Now you own 40 shares, $5 a share. How much money did you just make? How much? $200. Now, did you have to get up out of bed, go to work to make that $200? No, you stayed right there in bed, took the day off from work, made $200. You didn't have to get up. You didn't even have to brush your teeth. This is called putting your money to work for you. You understand? Now, if you owned 10,000 shares, oh, by the way, Paul Pelosi, Nancy's husband, sold what, 30,000 shares of Google right before they announced the investigation.
He's got a better trade record than Warren Buffett.
Senator Hawley of Missouri has introduced new legislation called the Pelosi Act, not allowing members of Congress to buy or sell stock while they're in office. The Pelosi Act. That is freaking magical.
That's that we can't prove it, but
You know what? It's hard to prove. Okay, so insider trading with members of Congress is this. Now, the Justice Department thing, what's the fine? Freaking jail, man. For you and I, it's jail. For Martha Stewart, it was jail. But just like I talked about in government class today, will the law be applied equally for Biden, Trump, and Pence for taking classified documents when they weren't supposed to? Because if you were, say, an Army officer and you were looking at classified documents in a SCIF, which is where Senator Biden would have looked at these classified documents in a secure room, you're not allowed to remove these. You're not allowed to photograph them, okay? Somehow they wound up at Biden's house from his Senate years. Now, as vice president, same thing. Now, he would have clearance to be able to take those home, but he would be told to return them. Same as president. President Trump had the right to take those, but he's supposed to give them back. Now, the President of the United States has the power to declassify anything he wants, including the investigation into the murder of JFK. But all of them have refused. They have the power to declassify that. More and more seems to be pointing at that, Vincent, the CIA. Okay?
I'm joking.
Now,
I'm joking, of course.
which is why they don't want us to know about it. You understand? Okay? You don't want the American people to know that. So, to your point, the fact that if they knew that the Justice Department, somebody tipped off Nancy Pelosi, the Justice Department was about to start an antitrust suit against Google, that's a crime if she acted on it. That's insider trading. Now, if you are a legislator, you're a member of Congress, and you are actively working on regulations that will regulate certain industries, and you use that information to buy stocks or sell stocks, you're not supposed to, but at this point, I don't think it's a crime. That's what Hawley's trying to do, is the Pelosi Act, to prevent them from doing that. And their families. You know what I mean? Not just them, but their family.
That would kind of suck.
You give up that right. Now, would that be a constitutional law? I don't know. I don't know if the Supreme Court would let that stand.
Senator can't get some.
You could do something maybe like a blind trust.
Give someone money.
That's what Mitt Romney was going to do if he became president. Put all of his stuff in a blind trust that he had no control over.
Paul Pelosi donated one of his stocks to charity, and suddenly the next month it dropped 200%. Tax write-off, give it to charity.
There's a guy on Twitter that follows Pelosi stock trades. Okay? And he publishes them so you can act on them too. Okay. What? Isn't it great? I love it. So, okay. Back to this. Okay, so Boeing goes up, you make $200, okay? So your initial investment is now worth $2,200. Okay. Now, if you know anything about the Boeing 737 MAX, they had a software problem. Now, you guys know these planes that we fly now are very advanced, okay? And when they built the 737 MAX, which, guys, is it Southwest Air? That's all they fly, 737s, okay? 2 of these planes crashed because of this software engineering problem. They shut down, they grounded every 737 MAX on the planet. Okay, now for the United States, that would be the FAA, the Federal Aviation Administration, grounded all 737 MAXes until they solved this problem. Okay, I think they're back up and running now. But, guys, one plane crashes, another plane crashes. What crashes? Holy crap, dude. You got all your eggs in one basket. You said, I had $2,000 and I'm going to freaking, I'm going to invest in Boeing. They got this good news and then they just got really bad news. Okay. So you call your stockbroker. You heard about this 737 thing. After the second one, you're like, oh crap. I call my guy. I said, I need to sell my Boeing stock. Guess who else is selling their Boeing stock? Everybody else. And who's buying Boeing stock? Nobody. So guys, here's the fact. A stock is only worth what somebody is willing to pay you for it. It's legalized gambling. And if nobody's willing to buy that stock from you, what is it worth? 0. You might as well hold on to it and see if things get better. Instead of selling, you're like, dude, I got to dump this. I got to dump this stock. Okay? And it drops to $35 a share. Okay? Now, you started at 50, you lost $15 a share times 40. Like 15 times 40. 600? So your initial investment is now worth $1,400. So this is the proverbial, guys. Don't put all your eggs in one basket. Okay? Now, if you didn't know this, I'm doing this for people that may not know this. Some of you guys may already know this. Let's find out. Is there something you can buy? Is there something you can buy, Vincent?
Yes.
That you invest $2,000 and you're investing in a bunch of different companies at the same time. What is that called? Not a hedge fund. You can buy an S&P fund, which is also called a what? Index fund, which kind of follows the whole index, otherwise known as a like an index fund. Okay, so guys, usually when you buy a mutual fund, let me give you an example here. So I've got $2,000, and it's going to cost you that. You're going to need $2,000 or $2,500 to start to get into a mutual fund. Okay, you go to Edward Jones down the street; they're on every corner. Say, hey, I got some extra money. I want to invest in a mutual fund. Okay, so $2,000 is going to be spread out here. See what I'm doing here? Okay. How do you spell Pfizer? Is there an F in there?
Yeah.
What PF, right?
PFIZ.
Yeah, Pfizer. Okay. Okay. Until you get to 100%. Okay. So McDonald's has a bad year, but Ford has a good year. They offset. So what they were talking about, index funds. So the index would be the New York Times or the New York Stock Exchange, like an index fund, which is a broad, you're buying a bunch of funds in there. Okay. And the hope here is that by diversifying like this, your fund will grow as the market grows, as the economy grows. So if you look back here, okay, this is 1934. Okay, this is 2015. This is the New York Stock Exchange. Okay, so if you invest in this, now the light blue is then Edward Jones saying, if you would have invested with us, you'd be in this light blue area. Okay, this is the dark blue is the market itself. Okay, so you see ups and downs throughout the years. Okay, more recently, you can look to 2008 with the housing bubble. It went down a lot. You can go to 2001, 9/11, it went down. Okay, and it took it more than 2 years to get back to where it was before 9/11. 2 years. Now, all that time, those 2 years, as the market is down, if you continue to buy mutual funds, you're buying low. Okay, and so when it rebounds, you're making more money. Okay, so these ups and downs are important and good, healthy for the market. Okay, sometimes the market is overpriced. Another one was 1987, took a big dive. Okay, October tends to be a bad month for the market. I can only theorize to why. It starts getting colder and people are staying inside. They're not spending as much money. Guys, our economy is really consumer driven. if we're not spending money, guys, our economy slows down. So in 2008, I remember, when Bush took office, guys, the economy was kind of struggling. They did a tax cut. And basically, everybody got a check for $600. And Bush said, take this check and spend it to get the economy moving. Okay? So, and that's obviously what we did with COVID with $6 trillion. Okay, here. Spend it. Don't go, people are like, well, I'm not going back to work. I'm getting this check every month. Right? And we got 3-year high inflation because of it. Okay? Which is a big tax increase on everybody. Okay? Inflation is a tax increase, really, if you think about it. Okay? So, guys, this is the way to invest. Now, if you want to put all your eggs, guys, there are day traders that try and play the market and stuff like that. Look, if you got money to play with, some of you guys gamble. Okay, I don't do that. Okay, now I do gamble over here. Like one year, you ever hear these commercials? Buy gold. Yeah. Okay, so I'm like, I go into Edward Jones. I'm like, I think I'd like to buy some gold. He goes, no, you don't. And I said, yeah, I want to buy some gold. So we took a few $1,000s, put it in gold, some gold markets. One of the things we bought was mining. So you got to mine for gold, precious metals. So these are precious metal mining companies and so forth. And I think we bought it, the fund, for like $36 a share. And so I'd watch it. Okay. And it went down. And it went down. And it went down. Like, I shouldn't have bought gold. And it finally came back up. And when it got back to $36, my guy sold it. Okay. Listen, why do people buy gold? They say it's a hedge against inflation. It's a hedge against recession, depression. Okay. If you own gold and the crap hits the fan, this is what my brother-in-law told me, who's really smart and really rich. He told me, he said, dude, if the crap hits the fan and you have gold, are you going to be able to eat it? Because if the crap hits the fan, you're going to want something you can eat. Think about that. So what are you going to invest in? Real estate, farmland, cattle, Walmart. Okay. But what if Walmart doesn't have goods? Like toilet paper.
I mean, they sold all their toilet paper, which means
Yeah, but what are you going to use?
the money.
Great answer. Okay. Yeah, so you can see how the market could crash based on like what I talked about with Boeing. Okay, so as we got into 1920, actually, before I get there, but you guys understand the process, right? I want to give you a tip on something. Some of you have jobs, some of you guys are making some money, okay? If you want to like get ahead in investing for retirement, okay, you want to invest in, you will invest in what's called a Roth IRA. How many of you guys have heard of this? Oh, shoot, that's awesome. Who's teaching you this?
Grim stuff.
Who?
Grim stuff.
Graham?
It's a YouTuber.
Okay. Is he teaching you this stuff? Okay. Okay. For those that you don't know what this is, there was a senator named Roth. Okay. And one of the problems we have in our society, guys, is we don't have people that save money. Like more than half the population have less than a week's worth of savings. That's sad. Don't be that person. Do you understand? Don't be that person. So what you can do, guys, is start invest. If you can do it when you're young, and I know it's hard. A lot of you guys got college. You got to pay for school. Some of you with your own money, and it's going to be hard. But if you can start at 22, like when you get out of college, if you can start then, you will thank yourself so much later. Okay, even if it's a little bit a month. Okay, so if you buy a Roth IRA. You can go to Edward Jones on the corner, say, I want to open an account. He's going to tell you. He or she's going to tell you. Okay, first thing you want to invest in is a Roth. What?
EA, I heard better.
Okay. That's an investment stuff. Okay. Whatever you choose. Okay. Now, they're going to tell you, you want to get into a Roth. Here's why. An individual can put in, I think it's now $7,900 a year. Okay. Into a Roth. You can't touch that money till you're 62. It's for retirement. But when you get it out, it's tax free. No capital gains taxes over the entirety of the fund. We're talking 40 years of growth in your investment, and these will be in mutual funds generally, your Roth IRAs, generally be in a mutual fund, an index fund, okay? No taxes, guys. So if you have the ability to, everybody in this country should be fully funding the Roth IRA every year. Now, if you make too much money, according to the government, you can't fund a Roth IRA anymore, like my wife. She's not allowed to. But our guy's got a way. He's got a back door. You can move some money from other investments into your Roth, not your cash. Okay? There's loopholes. Okay? So every year, or every paycheck, guys, every paycheck that comes out, it comes automatic withdrawal out of my account to my Edward Jones account into my Roth IRA. About $200 a month. I put into my Roth. Okay. Now, we talked about 401ks before. You guys know 401k. Let's talk about that in case people don't know. Okay. So a lot of the jobs you guys will be offered out of college will offer you a 401k. Okay. No longer do we have pensions. Okay. Now, Emma, your dad has a pension with the state. He's a state employee. Okay. Most companies don't have them anymore. If you work for any of these companies, besides maybe McDonald's, okay, for a long period of time, you guys used to have a pension, and when you retired, they pay you like 60% of what you made your last year for the rest of your life when you retired. That's called a pension. We don't have those at Bishop Carroll. Okay, we have a 401k. Yeah.
They still do that for like nurses that
It's government employees. Yeah, government employees have these. Okay. Private sector, not so much. Now, when my wife started at Coke, they still had a pension. So she has a pension and a 401k. And she has a pension for the 12 years she worked at Dow Chemical in Louisiana. Yeah. So my wife's going to retire first. She can retire now. We just got to get the gap of health care, right? So I keep working. She can get her health care for me. She can retire whenever she wants. Okay. I don't have that much money. I know we're married and we share it, but I'm not doing that. I'm younger than she is. I'm going to keep working. I'll keep getting the insurance. I like what I do. I like you people. The pay sucks. The 401k sucks. Listen, think about this, guys. Okay. I take 5% of my check every month. It goes into my 401k. Now, you guys, if you ever get a job offer and they say, we have a 401k, do it. Because they're going to match this. What's up, Coach?
Is that the maximum?
Usually it's 5 to 6%. Okay. So let's say 5% of my check each month is, or each paycheck is about $100. Actually, it's $125. I looked it up the other day. So $125 I put into the 401k. I'm sorry. Okay. Now, the diocese matches that. Okay. So times 4, once a month, I'm putting in $500 into a 401k, which is going into a mutual fund or bond. Okay. At Carroll, we have 4 options. You got large cap, which is big companies, small cap, small companies, emerging companies, a little more risk. This is less risk. These are established companies. We can choose bonds, which you don't get good returns on, but they're safe. You're not going to take huge losses on them. Or international stocks, which can be risky as well. Okay, so I take, I go like 25, 30, 15, 25, something like that, to get to 100% in those 4 areas. Now, how much do you think Mr. Ebright has in his 401k after 24 years working for the diocese in the stock market, growing over 25 years? $25 years.
Let's go with
Paid during the
50
summer?
Huh?
If you don't get paid during.
I get paid 12 months. It's spread out over 12 months. What do you think?
75?
Oh, no. It's about $160,000.
How much did the monthly bill?
Now, wait a second, guys. I'm 54. So let's say by the time I hit 65, if I work that long, which I won't, what, I'd be looking at like 300,000? Can I retire on that? No. Not if I die when I'm 70, maybe. Well, what does it cost to live on? I mean, I could get Social Security with that 300,000. It's going to be hard. Okay? Talk to your grandpa, because he just went through it. I mean, like, he's retired. Okay? And that's all he had. You know, now I'm not sure about grandma and what she had. Okay? You get Social Security and that. You know, Don's not going to be living the high life. You're not living the high life. I want to live the high life. Do you want to live the high life? Do you want to buy an RV and travel all around the U.S. and go up in Alaska and, you know, visit some places, do some things when you retire? I do. 300 guys, I'm pissed. At Coke, guys, my wife's 401k way outperforms my 401k because they know how to they have people that know how to manage money. We get the Ave Maria fund, which means we don't invest in certain companies. The diocese. Oh, yeah. But still, it's free money, guys. You're stupid. Like, oh, dude, you're going to take $125 out of my check? Nah, I'm just going to keep it and buy a nicer car. No, you idiot. Freaking take advantage of the free money. Even if it is the Ave Maria fund. Okay? So, listen, I got the Roth. And my Roth, guys, which I started, 20 years ago. It has more value than my 401k with all the free money. Okay, so I'm putting about $200 in the Roth each month, and it has more value. So I got the Roth, I got the 401k. So even without my sugar mama, I may have to work till I'm 65 if I did it that way, but I could probably be fairly comfortable to throw Social Security in with that. I should be okay if my wife decides to leave me nothing. Okay. Now, if I can help out with what my wife is with her 2 pensions, her 401k, and then her Roth IRA, and our traditional IRAs that we own.
I think you're just bragging at this point.
Yeah.
No, listen, I'm trying to tell you guys, you are smart. You guys are the like, those of you that are going to study engineering, those of you guys that are going to go into medicine, those of you going to do business. Listen, you start early like my wife did. You get a degree in college that you can find a job with. You put the money away, you invest it, then you can brag. No, I'm trying to say, I want that. That's what I want to hear.
Isn't that what Barbara did?
His wife was, she's a doctor. She's anesthesiologist.
Oh, God. Hey,
Yeah.
Now, he worked till he was 65. I'm not doing that. 58,
57,
59.
54.
And then I might just be a coach. Now, if I could trade, maybe I'd teach 2 classes and be a head coach, and all you have to pay me is health insurance.
Like 0 hours?
Huh?
Would you do the cigar?
Oh yeah, that'd be fun. We'll see. I don't know. But guys, you're with me here, okay? I'm just, hopefully, like, some of the sticks, like the Roth is so important, guys, okay? So as soon as you can start, Mariah, as soon as you can start, you'll thank yourself, okay? Now, can you borrow against that IRA? Yes. Like, you really need that money. You're gonna pay big penalties and fines for doing that, but you can get the money. Like, you're an emergency, I have to have this money. You don't want to do it, obviously, but you can borrow against it, your 401k, and your IRAs. Okay, so you have Roth IRA, traditional IRAs, individual retirement accounts. Okay, and then you got just individual stocks and bonds that you can buy. You can invest on your own. Okay, if you're into that sort of thing. I like to leave it in the hands of the professionals. Sergio, you're too smart. Okay, you're gonna do it on your own. Okay. Good luck. Okay, it's what it's gonna take. And try and get Pelosi's cell number. All right.
You should follow follow his voice.
Yeah. Somebody brought up Rupert Murdoch. Okay, Rupert Murdoch of Omaha, Nebraska, has been the best, besides Pelosi's, at timing the market. Okay, and his fund, Berkshire Hathaway, to buy one share of Berkshire Hathaway. Anybody seen it lately? It's over $100,000 to buy one share of Berkshire Hathaway. So it is the fund of the rich.
Warren Buffett.
Warren, did I say Warren Buffett?
Yeah.
What did I say? Yeah, I'm sorry. Yeah, Warren Buffett. You're sorry. Yeah. Rupert Murdoch, Fox. He owns Fox. Okay. All right. So you can see how this happened, how the panic sets in. So as I mentioned, October's a bad month, and I think, guys, businesses in this country figured out that we can maybe help us get through the October with really blowing up Halloween. Okay, like Halloween has become a huge holiday. Okay, so people will spend money on it.
Oh, yeah.
Okay, so that kind of helps the economy through that the doldrums. Okay, but on there's Black Thursday, and then there's Black Tuesday. Okay, so on Black Thursday, guys, the market was overpriced. Panic set in. People started to sell. Okay, now J.P. Morgan and a lot of other bankers, bunch of powerful bankers, got together that morning about 10 a.m. on the 24th and said, we need to start buying up some of this stock. Otherwise, it's going to keep falling. So they pulled together $240 million, 1929. That's a lot of money. And they started buying up stock because everybody was trying to sell. And they were like, woo, all right, somebody's buying my stock. I'm selling. I'm good. Okay, I got out. Okay, well, the next week, the bankers were overcommitted. Okay, and guys, the market was still overpriced. Hoover goes on the radio and he assures the nation the economy is on solid footing. You have nothing to worry about. Don't panic. So Monday was a bad day, and then Tuesday the crap hit the fan. Now, when you say crash, you're like thinking from here to zero. That's not what happened. Okay, but they did drop close to 50% that day. Okay, 16.5 million shares traded. Okay, prices fell steeply, up and down, up and down. The average top 50 fell 50%. So let me show you what that looks like on a graph. Okay, so this is Black Tuesday. Now, this is Black Thursday. Okay, this is Black Tuesday. So you can see the market did rebound some. It rebounded here, and then it dropped. Okay, it was a free fall. Now, it didn't hit the bottom until 1932. Okay, so companies like U.S. Steel was trading for $262 a share in September of 1929. Okay, U.S. Steel eventually dropped to $8 a share from 262. General Motors went from $82 a share to $4 a share. Now, if you held on to that GM stock from 1929 and you had a few shares of that, you'd be pretty good off right now. Okay. But a lot of people sold. Okay. Yeah. So Montgomery Ward's another one. It was over $100 a share, dropped to like $8 a share. So these big companies, guys, were hit hard by this. And so were their employees. And so it wasn't a crash to the bottom, but it was a huge hit. This is the scene outside the New York Stock Exchange that morning. People waiting, anxiously waiting for news about what was happening inside. Okay. So investing, guys, can be tricky. I do not watch the market at all. It's not something I check on a daily basis. Yeah.
How did it get like so low so quick? Was there like some big event that happened, or is it just
The sell-off? Remember when Boeing, we talked about nobody's buying, so the value drops rapidly, and that was across the board. Okay. Today, you have certain companies, you know, that you just trust it's going to be okay. Walmart's going to be okay. You know what I mean? It's a blue chip stock. They're going to be fine. Target, you know, the mutual fund thing is a good idea. If you want to bet on America, America's usually a good bet. Which party have we seen higher returns, Republican or Democrat? And that poster actually shows it. And the answer is, it's almost 50-50. It's almost even. Republicans and Democrats. In fact, the Democrats have a slightly higher, as while they were president, slightly higher return in the stock market. It's like 1%, less than 1%. Okay. But both of them are close to 11%. It's a little bit better than what you're getting in your savings account right now. Okay.